Welcome to my monthly update on alternative asset fund administrator and auditor league tables. You may not know that there are over 600 fund administrators and over 500 audit firms servicing the private markets. I am George Evans, one of the co-founders of Convergence. Convergence is a data and analytics firm focused on over 40,000 SEC and state registered investment advisors. We monitor close to 400,000 funds globally serviced by the industry and have been producing league table and market share data for over the last 7 years. This has been most helpful data to the industry watching the shifting sands. Note that league tables are only available to Convergence clients. League tables can be purchased at the Convergence e-commerce site, which is at www.convergenceinc.com, and just select the e-commerce tab.
Hi, everyone. My name is Dario Poliano, and I will be interviewing George Evans today for our monthly podcast on league tables and market share year-over-year growth. So, George, let's discuss our observations.
Yeah, thank you, Dario. Let me start with a little bit of league table history and some of our methodology. As mentioned, at present, there are over 660 administrators and 520 audit firms servicing this market, and they are all named in SEC regulatory filings. So much for a consolidated industry, Dario. Question 1, can growth mask the real trends at auditors and administrators? The answer is a big yes, so be careful. Growth is driven by many factors, each of which reveals strengths and challenges that the reader cannot see without the additional detail we provide. For example, asset growth of plus 10% at an administrator can be driven by a plus 30% increase in asset inflation and a minus 20% client attrition rate. Not really a good story. Convergence decomposes administrator and auditor books using 9 proprietary growth factors to explain what drives growth at these firms and across the industry. And we will tell you when growth may be masking a negative story or trend. Convergence also offers its clients a competitive analysis insight. We will decompose that book, benchmark a service provider's growth to the market, and select competitors. We specifically look at business that has been won, organic growth, new logos, outsourced business, new emerging funds, business lost, and funds closed. This is all stratified by size band and by asset type, whether it's a hedge fund, a private equity fund, a real estate fund, a venture capital fund, or a structured asset fund. So let me start with some comments generally on market growth today. In this reporting period, January 2020 to January 21, we saw 2 market events. We saw Alterdamus acquire Strata Fund Services and Sudrania Fund Services acquire Triple Leo. Also in this 1 year, we saw advisors disclose over 91,000 private funds. That's a net increase of over 5,900 funds, up almost 7%, and assets of over 20.8 trillion, a net increase of 2.35 trillion. That's up 12.7%. So what we're looking at here is fund increases of 7% in the market, asset increases of 12.7% in this market.
Great. So, George, how did the top 25 administrators do January 2020 to January 2021?
The top 25 administrators won 43% of the 9,040 total new funds that were disclosed. All other administrators won 20%. Advisors who self-administered kept 37% of these 9,000 funds. The top 25 administrators also won 55% of the 1.3 trillion in new fund assets. All other administrators won about 11% of that, Dario, and advisors who self-administered kept about 34% of those funds. So overall, private asset growth year over year was 12.7%. So how did these administrators rank against, these groups of administrators rank against that 12.7%? The top 5 administrators grew 9.74%, while administrators 6 through 10 grew a little over 18%, and administrators 11 to 25 grew 20.8%, while all others, so that's administrator number 26 all the way to administrator 660, Dario, and self-administrators grew about 30%. That's about 2.5 times the market. Private fund growth reflected that same general trend. Overall growth, as I mentioned, in the market was 7%. The top 5 administrators grew close to 4%, while administrators 6 to 10 grew at 6.3%, and administrators 11 to 25 grew very close to 15%. That's double the market growth of 7%. While all other administrators, 26 to 660, and those that are self-admin grew about 15%. That's also double the market. So that's an interesting fact from my perspective, that while the big 5 grew about 4% and the big 5 or 6 through 10 grew, close to about 6%, 11 to 25 and the rest of the market, grew close to 15%. And that's really, as I said, double the market. So what does this really mean, Dario? It really means that advisors are moving down market. We see fragmentation in how business is being awarded across the industry. And we think this is a trend to watch in the marketplace today.
So George, how prevalent is the self-administration market?
Well, listen, the self-administration market, Dario, is still a very big market. Out of those 90,000 funds, over 31,000 are self-administered in the market, and that's up about 1,400 funds year over year. Self-administered funds represent over 34% of all private funds in the market, and that's down a little bit from 35% in 2020. This is very consistent with what we've seen in actually now 22 consecutive quarters. So what does that really mean? That means that outsourcing continues and that advisors are continuing to look to third-party administrators to service this business. When you look also at the self-administration market, it's a big market. It's about 5 trillion of that 20 trillion. So that value is up about 9.5%. So that's a big ticket, and that's a big opportunity and continues to be a big opportunity for the administrators. I think if you think about it, Dario, it all started with mutual funds and 40 Act business. It's now moved to hedge funds, and now outsourcing funds that were self-administrated is really starting to move into. It's moved rapidly into the hedge fund market, and it's now moving throughout the closed-end market. So it's a big ticket item for a lot of administrators, a big part of their strategy and their target market.
So George, were there notable Convergence clients during this period?
Well, listen, Dario, there were a few, and I want to give them a shout out this month, right? Here's who I would look to, and I'd like to mention. So Gen 2 Fund Services ranked number 1 in this year period in net new funds, adding 462. And that's up close to 44% in the market. SEI Fund Administration ranks number 3 in net new funds, adding 291, and that's up about 13%. Apex Fund Services ranks number 12 in net new funds, adding about 140. That's up about 9.6%. Ultradamus ranks number 6 in net new funds, adding about 228, up about 17.3%. And Morgan Stanley Fund Services ranks number 7 in net new funds, adding about 220. That's up about 20%. Our hats are off to these 5 administrators and Convergence clients that had really a very good showing over the last 12 months in the marketplace.
So George, let's now turn to the audit market for the same period of time.
All right, thanks, Dario. So let's talk about the top 25 auditors. The top 25 auditors won almost 70% of those 9,000 new funds that were disclosed. All other auditors won about 6%, and 24% of those funds did not report a fund auditor. And I'm going to talk about that in a little bit. The top 25 auditors won 88% of the 1.3 trillion of new fund assets that came to the market in the last year. All other auditors won about 1%, and 11% of those funds did not disclose an auditor.
So George, I guess for the listeners, are there funds that don't report an audit firm?
Well, listen, the number of funds not reporting an auditor totals about 13,000 funds. And that's down 5%, but that's still a substantial number. Let me talk to you, Dario, a little bit about why funds might not be reporting an auditor. Funds not reporting auditors represent funds that are not subject to an audit or are subject to an audit and are in the process of selecting an auditor. The latter creates a business opportunity for audit firms. So those listening should contact Convergence if you want insights into this population, of advisors. So back to the numbers then. As I look at the numbers, we mentioned private asset growth year over year was about 12.7%. The big four grew at about 11.7%, while auditors 5 to 10 grew at about 19.4%, and auditors 11 to 25 grew at about 19%. Private fund growth reflected that same general trend. So overall, when we think about the overall growth of the fund market at 7%, really auditors 5 through 25 did quite well. Those groupings really doubled the market. Same trend we talked a little earlier about with administrators. Advisors are clearly moving down to that next tier of auditors. We'll talk about that in future podcasts, Dario. We'll really take a hard look at why firms are moving past that top tier of administrators and auditors, because we're seeing it, on both fronts.
Okay, great. So George, I guess how did the Convergence clients do this month in the audit industry?
So again, I think some did terrific, and I want to give a shout out to really 4 Convergence clients. The first is Price Waterhouse. Price Waterhouse ranks #1 in total private funds. It maintains its 2020 rank. Its funds increased by 7.8% in the market. Deloitte ranks #4 in total private funds. Really no change from its 2020 rank, but its funds increased close to 11% in the market. EisnerAmper ranks #5 in total private funds. No change from 2020, but its funds increased almost 20%. And it ranks #8 also in total assets. BDO would be the last one I'll mention. BDO ranks #7 in total private assets. No change from its 2020 rank, but its funds did increase over 7%.
All right, so George, any final thoughts you want to close out with for the listeners?
Yeah, thank you, Dario. I think this has been good, and I look forward to continuing to talk about these trends. Some big questions, right? Are these industries really going to consolidate? 660 administrators, 520 auditors. I hear people in the market debate that with great vigor. Will we see advisors continue to go to tier 2, tier 3, down market? I think we'll wait and see, and we'll see that trend that we saw this last year, and if that trend continues. I want to note that this data is essential, really, to strategy and growth, and I hope this high-level overview I'm doing is helpful to our listeners. We continue to see European players looking for U.S. properties. We continue to see private equity investment in administrators, and we continue to see a number of audit firms, prominent audit firms, losing substantial business in 2020. So stay tuned. So contact me if you have any questions, and I really look forward to seeing everybody next month. Thank you all for your time.